Working for yourself is a dream for many. It's liberating to be able to set your own hours and make decisions for yourself. On the other hand, there are many critical administrative things an employer does for you, like managing your tax payments to the IRS. If you decide on going independent, you'll need to learn to pay your self-employment taxes. All workers are required to pay taxes on their income and pay into Social Security and Medicare. While employers typically withhold these taxes directly from an employee's paycheck, self-employed individuals have to pay them directly to the federal, state, and possibly local collection agencies. Employers are also required to cover half of their employees' Social Security and Medicare taxes, so you'll owe the full amount if you're self-employed. And since you aren't necessarily making the same amount week to week, you'll have to estimate your annual taxable earnings and make quarterly payments throughout the year. Self-employment tax refers to taxes paid by an independent contractor that goes to the federal programs of Medicare and Social Security. Employers typically pay the Medicare and Social Security tax on their employer's behalf through FICA. Employers withhold employee wages to pay one part of it, and they pay another portion themselves. Self-employed individuals must pay both of those portions on their own in addition to their regular income tax. The IRS set the self-employment tax rate at 15.3%. That rate is the sum of two parts, 12.4% in Social Security tax rate and 2.9% Medicare tax rate. All your self-employment taxable income is subject to the Medicare tax, but higher incomes are not subject to the Social Security portion beyond a set point. For 2022, the Social Security tax applies to your first $147,000 in self-employment earnings. Anyone with $400 or more in earnings from self-employment will be held liable for Social Security and Medicare taxes. If you don't have an employer to withhold your share of those taxes for you, then you'll have to send those payments for yourself. If you work multiple jobs and have at least one employer withholding income for FICA payments, you may or may not need to pay additional taxes. This will depend on the relative income and the amount paid by your employer. Your self-employment tax is calculated according to your net earnings from self-employment. You'll determine this using the IRS Schedule C form, where you'll include figures like gross receipts or sales and cost of goods sold to calculate your gross income and subtract from that any eligible business expenses. Schedule C will break expenses down into various categories, but these aren't all inclusive of every possible expense. It's important to have a reliable bookkeeping to make sure all the costs that go into running your business are accounted for. These can include a home office, health insurance premiums, internet and phone services, a business vehicle, interest on business loans, continuing education, startup costs, and accounting services. Consulting a tax professional will help identify all the expenses related to your type of business. If any of these costs overlap your personal use, like your home internet, you'll have to determine how to split that cost according to how much goes to your business needs. Once you have your net profit, you'll use IRS Schedule SE form to calculate your self-employment tax. Assuming your income doesn't go above the set thresholds, you'll pay a total of 15.3%. One bright side to paying these taxes is that you'll be able to deduct that amount from your adjusted gross income when paying your income tax. When an employer pays taxes on your behalf, they don't wait until the end of the year to make payments. All of these taxes calculated according to income are supposed to be paid throughout the tax year as you earn the income. For independent earners, that means making quarterly estimated tax payments to pay the self-employment taxes and the regular income tax. The IRS provides Form 1040-ES to determine how to estimate both of these and avoid underpayment penalties. You may want to err on the low side to keep more money in your pocket, but if you owe too much come filing time, you'll have to pay interest on what you owe. In order to avoid any fines or penalties for underpayment, you should make your estimated payments according to these quarterly deadlines in 2022. The first quarter payment is due April 18th, followed by June 15th, September 15th, and finally January 15th of 2023. After you determine the amount you owe, you can pay self-employment taxes online through IRS Direct Pay, which allows you to make payments directly from your bank account. There's also an option to pay by debit or credit card, and even apps like Venmo, but these will incur a transaction fee, which is a flat rate for direct debit and a percentage for credit. These rates will vary slightly by payment processor, but the differences could add up depending on how much you owe. The IRS also partners with a number of local businesses that allow you to pay in cash. You can find details on all of these options on the IRS website linked in the description. To make any payments with any method, you'll need to use either your Social Security number or an individual taxpayer identification number in order to verify your identity. As you can tell, there are many opportunities to help you keep your tax burden manageable. The problem is that few self-employed individuals have the time or expertise to figure out the tax system and claim the savings. If you don't want to stress over your taxes, the best option is to find a professional accountant you can trust to go through your taxes with you. You don't have the time to waste reading IRS fine print, but you don't want to leave any of your hard-earned money income behind either. Get some help and breathe easy with 1-800-ACCOUNTANT. As always, thanks for watching. If you found this to be educational or informative, helpful, or entertaining, please like and subscribe, and look for 1-800-ACCOUNTANT on your social media channels of choice.